All right, hello everybody. This is Anthony with Traders Ultimate Edge. It is March 14th. Happy Pi Day. So we'll look here at the markets. I came into the day thinking we were just going to kind of go sideways, and I think that's about where we were at. So we started to get some news about China. China over the weekend. There was some thoughts that maybe they might provide aid to Ukraine, or not to Ukraine, to Russia, and that kind of escalated a little bit. It's nothing really concrete. It's more of, well, what if? That kind of drove down the markets here today and really caused this swing. Now let's look at the markets from a technical perspective, and then we'll talk a little bit about the fundamentals of what's going on in Ukraine and all that. Let's zoom out here we'll actually look at SPY real quick. So you'll see this area here at the bottom of my screen. This is this little rectangle. This is the area where SPY gets bought every time. Okay, it's from the high right there all the way down to the low over here. Every time it comes into this area, it gets bought. It's you might call it a supply area, right? Anything below 416.27 on SPY kind of gets bought up, and that is right about this low right here is 41.53. Anywhere kind of below that area is getting bought up here on ES. So it's really kind of a bottom. Now also, if you look here at this screen, you will notice, and it depends on where we're going to close today. We got 10 minutes left in the market. 1, 2, 3. It's a series of higher lows, and again, we got to see where we close today. But we can probably make some sort of trend line here, right? Higher lows, giving us a triple bottom. And you're also going to notice the volume trending down. You see this trending down. That's because people are getting tired of Ukraine. They're getting tired of listening to anything having to do with Ukraine and Russia. Most people have already made their bets on whether we're going to have World War III or not, and I think everybody that wants to be out of this market is probably out of the market at this point. Unless, of course, news changes, right? But at this point, I think everybody that wants to be out is out. And, of course, we could drive a little bit lower. This area here, 415.11, corresponds to... it's not on this chart. But anyway, the lows from March 8 down here, you know what? They're actually wrong. Yeah, so they're actually off. The ES March 8 low is right here, where SPY is down here. So keep that in mind. They're a little bit different. So, it could drive a little bit lower here on the SPY, but I really think that's about it. I think everybody that wants to be out of the market is, and I'll explain that in just a sec. Last thing I want to point out to you about the volume here is this fall right here, okay? This one right here. Again, this is the SPY 1 hour, and you notice the volume came all the way down here, right? A lot of enthusiasm to sell off on these days. By over here. Much less enthusiasm. What this reads essentially, if you aren't aware of this indicator, this is essentially cumulative volume delta. It does a few things quite a bit different though, and one thing it does is it measures volume over the average, and that's what our little histogram does here. So we have much less volume over the average down here, which means this push down was much less enthusiastic than the previous moves, which would also line up with it being a little bit of a higher low and potentially a triple bottom as we're losing volume going down here. Now, does this mean the market's going to bounce tomorrow? I don't know. Oops. Okay, I just messed up my screen. Wow, that's brilliant. Okay. Now, does this mean the market's going to bounce? I have no clue. All right, I've got no clue. It's going to be entirely news-driven, guys. Entirely news-driven. And let's dive into that a little bit. Over the weekend, there was some information that came out that said from both Ukraine and Russia and the U.S., I guess, that said there was some positive developments in the peace talks. And now today they paused the peace talks. They paused them not because anything went wrong, but because they needed to get some technical clarifications around certain terms. And they didn't say what the terms were or nothing like that, but I've got to figure. The only reason they're doing that is because they're coming to some sort of deal on something. I don't think it's humanitarian corridors, because that's already been worked out multiple times. I think 4 more of them got opened over the weekend, so that citizens can get out of places, including Mariupol, which has been completely besieged by Russians. It's all the way on the south side of Ukraine, southeastern side. And, I have to think that the only reason they're getting definitions on certain topics is because they're trying to come to some sort of deal, and they need the legalese. Okay, that's kind of my thought. I don't know why else they would be doing it. Maybe I'm wrong on that, but that's my thought anyway. One other thing I want to point out today. Let's jump over here. Just need a clean chart. Okay, let's look in our sectors. Guys, so today we see some interesting things in the market. We've got CLF down 2.8%. We've got X down 3%. Both big steel producers have had a huge run up on the back of potential war news, right? NEM down 4.5%. Big miner is pulling back here. And look at oil. Oil now is down to $101.88. Big money is selling off this stuff that has popped. Big money is selling it off. Let's look at defense. Okay, here's LMT. LMT for the day. LMT climbing a little bit here at the end, but mostly it's been down here. So we see it aim to here, all the way back down. Just kind of near yesterday's close. Look how far off the highs we are. Okay. LMT ran all the way to $480, all the way down to what right now? 444. It's going to keep falling. This run up was retail traders, and it is big money that is now selling it off after this run up. Okay. So we've got to keep our eyes on stuff like that. Like how are the undercurrents of the market moving? Like what's moving in relationship to other things, right? Back to our sectors here. We'll look at XLE, for example. Look at this. If Russia and Ukraine was still an issue, don't you think big money would be pumping up oil right now? Right? If they think it's going to go even higher, if they think oil's going to go to $200 a barrel or whatever, don't you think they might be buying oil companies? No, they're down 3%. And that's because big money is selling all the shares that retail traders have driven up. Look at XOM, down 3.7% today. Valero, down 1.3% today. That's what's happening. It's this rotation out of these peaks. And there's stocks that were sold off a lot that are catching a big bid. Financials, for example, catching a big bid today. Look at OLN up 5.8% today. For a lot of the day, cruise lines were up. They're just kind of like back flat now. They were up for a lot of the day. Airlines up 1.7%. That's American Airlines. So you guys see this? See how this rotation happens? It's like a pendulum swinging, right? We have to kind of come back to even here. Chewy's down. Nobody needs dog food, I guess. And it's going to kind of come back to even here, right? But keep in mind what big money's doing, and that's what they're doing, is they're selling off the stuff that peaked, and they're taking advantage of retail traders that want to buy it. That's what they're doing. So if you're buying this stuff right now, you're buying at the top, okay? I've sold all of my oil. It's gone. It's out of my portfolio. So that's where I kind of see the market here. I think in the absence of worsening news, okay, and this is the big caveat. I think in the absence of worsening news, this is our triple bottom, okay? But the issue is that we can get news out of Russia or Ukraine or China or whoever at any time, and the market is overly sensitive to it right now. Overly sensitive. So any sort of news can drive us down. But technically speaking, right, if we just look at the technicals of the markets, this is what I believe is the technical bottom. Just look at the patterns, we look at where people are buying things, that sort of stuff. Now we get some news, or if the FOMC is overly hawkish on Wednesday, we could drive down further. Now, 7 rate hikes priced in. It's 25 basis points at each meeting. 7 rate hikes is priced in. Running off the balance sheet is priced in a controllable, predictable manner that is priced in. Okay? We have to see what they say on Wednesday. But those are my thoughts for right now. The market is entirely news-driven. I've shown you what the technicals are doing, but technicals are out the window when you have fear over, X, Y, or Z, right? Whether it's COVID or World War III or, I don't know, somebody sneezes, whatever it is. All right, those are my thoughts. Thank you for listening, and I hope you have a great evening.